Let me walk through of this PPT on sustainability reporting and the evolving ESG disclosure landscape. Let us examine the global framework that are shaping sustainability disclosure, namely the IFRS Sustainability Disclosure Standards S1 and S2, the SEBI-mandated Business Responsibility and Sustainability Report BRSR, and internationally recognized frameworks such as GRI, which is Global Reporting Initiatives, SASB, Sustainability Accounting Standard Board, and TCFD, the Task Force on Climate-Related Financial Disclosure. These standards collectively form the foundation for transparent, comparable, and decision-useful sustainability information. In today's world, in today's scenarios, the investors are not only interested in the financial metrics, they are more interested in non-financial metrics as well. What is the sustainability of the organization as a going concerns? So they are based on all this analysis, they finally decide to invest in any organization, whether it is a fund houses, whether it's a retail investors. As regulatory expectations rise and investor demands evolve, it has become imperative for organizations to align their reporting practice with globally accepted norms while ensuring compliance with India's emerging ESG ecosystems. This presentation aims to provide a comprehensive understanding of the requirements, best practice, challenges, and opportunities associated with robust ESG reporting. Moving ahead, IFRS Sustainability Disclosure Standards, which is captured in S1 and S2. The S1 reports for general sustainability and the S2 reports the climate-related disclosure. The scope of S1 is basically general disclosure requirement for sustainability related financial information to meet investor decision needs. S2 are basically focused on climate-related disclosure, including risk, impact, and governance. However, apart from though it has been started through IFRS, but there are other standards which are trying to get aligned with IFRS sustainability report to maintain the uniformity across all the global countries. The benefits why this is required. The benefit is basically to streamline reporting practice worldwide and brings transparency to sustainability impact and risk. The investor today needs more detailed structures, not only on the financial metrics, but also on the non-financial metrics. The other global frameworks on this particular reports are GRI, SASB, TCFD, and initial regimes such as SEBI's BRSR, which is now already adopted by all the listed companies in India. BRSR by SEBI, purpose and regulatory role, mandatory ESG disclosure frameworks for listed Indian companies. I have also taken few examples of the companies who are already reporting BRSR and on ESG as a mandatory compliance by SEBI. SEBI introduced this sustainability report in May 2021 and faced its applicability to large listed companies. The BSR is a principal regulatory route to ESG disclosure by listed firms in India. The high coverage of basic energy and emission in an analysis of 300 of the top 1000 listed companies financial year 23. Greater than 96% reported energy consumption and 94% reported 1 and 2 emissions. Means all the companies has already adopted this ESG compliances, and they are seriously working on them, and also they are giving the framework on their execution for the investors so that the investors get more information on the adaptation of this ESG rules by organizations. The BRSR ESG disclosure categories for investor comparability. Structure BRSR reporting across environment, social and governance for clearer sustainability assessment. Environment include resource management, energy, water, Emission is the GSG reporting waste and pollution. Similarly, climate risk is also part of the environment. Similarly, when we move to the social here includes the employees' welfare, health, safety, diversity, and training. Community development, local investment, stakeholders engagement, human rights, supply chain due diligence, and product responsibility, customer safety, and quality. Finally, when we move to the governance. So the governance tells us about the board composition, independence, diversity, and skills. We all know the diverse governance, the diversity in the governance, the diversity in the management help any organization to grow further, to make their portfolio better, and to forecast the risk and how to tackle out from the risk. Similarly, governance also includes the ethical practices, anti-corruption compliance systems, risk and audit, internal control and audit oversights, and disclosure governance, reporting policies and oversights. So these are the three core parameters which are included in environment, social, and governance, and combining all this becomes the ESG. Guidelines of Responsible Business Conduct, NGRBC. Framework aligning Indian business conduct with BRSR and global standards for ethics, human rights, and sustainability. NGRBC is basically nationally guidelines on responsible business conduct. The alignment of even NGRBC is mapped with the BRSR. So there is a uniformity in reporting whether it is NGRBC or BRSR, and it is applicable since it is already applicable, and the application helps companies embed ESG into strategy and reporting, supporting compliance with BRSR by SEBI. What is the outcome of this reporting? The outcome of this reporting is a stronger governance, risk management, transparent sustainability report. Ultimately, combination of all this makes an organization as a going concern and a sustainable organizations. The earlier the risks are mitigated, the better it is for the organization and to sustain in the future. Aligning corporate reporting with UN SDG. SDG is basically the Sustainable Development Goals of United Nations. So the Sustainable Development Goals of United Nations show how reporting frameworks map company impact to global goals for investors. So major focus of SDG is to on poverty, health, education, climate action, map disclosure to relevant goals. So even the UN suggests the organization, even the UN mandate to the organization to do the CSR activities, and those CSR activities already included in ESG reports. So any corporate, they need to invest in the poverty, health, education, climate actions in that particular region or in the periphery or in the region where they operate. Investor value. Use SDG alignment to demonstrate long-term impact beyond financials. So today the investors are very keen in knowing whether these compliances are being fulfilled by the organizations or not. And if fulfilled, the educated investors go thoroughly and go in details whether it is just a formality or the fulfillment is being done on a very serious note. Framework. Even the UN SDG integrates IFRS S1 and S2, GRI, SASB, TCFD, and SEBI BRSR for comprehensive reporting. Global Reporting Initiative GRI Framework Overview. The scope of GRI is global framework for reporting impact on economy, environment, and society. Major focus of GRI is detailed guidance across ESG topics to promote transparency and widely adopted by global companies to communicate sustainable performance. I would rather suggest each and everyone to go through the real-time reports of ESG published by the top 50 companies. You can read any one or two, you will get the idea what is the ESG report, why this is important, and why this is important for any organization in a longer term and sustainable, and to have that organization on a going concern basis. SASB, industry focused, investor ready ESG standards. SASB is Sustainability Accounting Standard Board. SASB Sustainability Accounting Standard Board. There is a separate dedicated accounting standard board who really works for ESG standards to keep on enhancing the standards of the ESG requirements, so that rather than this becomes a formality, this becomes a mandate and gives benefit to the organization in the longer terms. This is the ESG highlight for Infosys, which was reported in 2024-25. So you can see the environment, social, and governance, which are captured. The entire data is captured here. Infosys says that carbon neutral 6 years in a row. They are carbon neutral 6 years in a row. This is again a mandatory requirement of ESG. 29.7 million square feet of the highest level green certified space. 77.7% of electricity of Infosys operation comes from renewable resources. So this keeps on increasing. Finally, the target is obviously the target of any organization is 100% in the near future. CDP climate leadership 9 years in a row. Infosys is again a CDP climate leadership 9 years in a row. If we come to the social part, 13.3 million people reached with digital skills, including employees, client workforce, student, teachers, and communities. 15,200 plus fresh graduates hired globally. So these are the social fulfillment done by Infosys. Similarly, when we go for the governance part, world's most ethical company recognized by Ethisphere for the fifth consecutive years, binding corporate rules. First India headquartered company to receive approval from European Union data protection authorities. So you can see the parameters which are applicable to Infosys in terms of highlighting their ESG reportings. TCFD 4 pillars for climate related financial disclosure. TCFD are basically the task force on climate related financial disclosure. So this is again quantifying the non numbers, quantifying the non numbers in terms of sustainability reports. How companies disclose climate risk and opportunities to inform investor assessment. The governance backing the TCFDs, broad oversight of climate related risk and opportunities, and management roles in assessing and managing climate issues. The metrics which are adapted by or which are instructed by TCFD are matrices to access climate exposure and performance, target for emissions, resilience, and transition matrices. ESG as a compliance and regulatory driver in India. So in India, basically ESG is basically governed by Security and Exchange Board of India using their BRSR report, Business Responsibility and Sustainability Report. Compliance implications, standardization, disclosure, audit readiness, reputation, risk management. Practical outcome of the SEBI BRSR is stronger investor confidence and improved market access. So Nifty 50 top 12 by market cap with BRSR ESG report. All 12 companies publish BRSR ESG sustainability disclosure in their investor sustainability pages. In many cases, the BRSR is published as a dedicated PDF, means it is reported separately the way it is the financial reportings are being done. And these are part of LODR. India's National Sustainability Reporting Focus and Framework. And framework. So this is again in India the complete ESG, the sustainability reporting is governed by SEBI BRSR report. Greenhouse gas emission reporting, what investor needs. Through greenhouse gas, the focus is on, to measure direct and indirect emissions, set targets, disclosure, transparency, and regulated for investor assessment. These are basically for the hazardous waste, and the manufacturing organization. They need to follow this. They need to follow this. The investor significance having the GHG report is access climate risk, validate commitments, and inform capital allocations. ESG highlights Hindustan Unilever Limited. This is a report of ESG from HLL. So they have also bifurcated this report into economic, social, and as well as governance. ESG reporting challenges and opportunities for Indian compliance. Though ESG is spreading to all the organizations, to all the corporate sectors, with irrespective of its form, whether it is a private or government sectors, but since it is initial stage at its initial end, there are a lot of challenges which are being faced. But however, those challenges are lesser as the professionals are trying to mitigate all those challenges on a timely basis. So some of the challenges are data gaps, limited expertise and capability for ESG measurement, lack of standardization. The uniformity needs to be maintained. That uniformity is still not there. Regulatory compliance pressure as ESG becomes mandatory in India. Opportunity, yeah, because of this ESG report, improved risk management through structured ESG disclosures. The final actionable will be implement standardized process and upskill teams for BSRS and IFRS alignment. Case studies of effective ESG reporting. Leadership commitment, stakeholder engagement, use of aligned metrics, transparent narrative, reporting, BRSR by SEBI. So these are the requirement of the organization when it gets mandated and to get this compliance fulfilled. Global ESG reporting adoption trends. Regional disclosure gaps driven by regulation and stakeholders' demand. So when we comes to the global ESG reporting adoption trends, it says that higher disclosure in developed market, emerging economies, evolving frameworks. So developed markets are more inclined towards fulfilling all the compliances. And in the developed markets, the requirement or the mandate is from GRI, SASB, TCFD, which and the guidelines needs to be fulfilled by the corporates. And the regulatory drivers are IFRS, S1 and S2. And if when it is comes to India, then SEBI BRSR mandate is there. Sustainability accounting practices. Integrate ESG data with financial for a holistic performance view. Enable better risk assessment and resource allocation. Support long-term value creation through measurable metrics. SASB defines financially material sustainability metrics. So overall ESG reporting is standards. We are habituated of reading only the financial metrics, but however, the responsibility of a corporate is beyond those financial metrics also, which comes in the form of ESG, and this ESG requirement is also required to be fulfilled by them. How investors and analysts use ESG report. Why this is required? They use ESG report to evaluate non-financial risk. They access governance, quality, and management because the growth, the forecast, the variances, the lesser variances is possible only when the governance is good. And who runs the governance? The management. So that means the management also needs to be good. Further, the investor and analyst also view the ESG reports to rely on transparent, comparable disclosure, integrate ESG data into portfolio risk management, and use report to drive engagement strategies. Moving ahead, benefits of robust sustainability reporting. So this benefit is not only for the organization who is fulfilling the compliance. This benefit is for the country. This benefit is for the community. This benefit is for the investors. How structured disclosure drives resilience, trust, investment, and innovations. Through the ESG report, early risk mitigation by identifying environmental and social risk. A stronger reputation and stakeholder trust across investor, customers, and regulators. Attract sustainable investment by meeting ESG expectations. Uncover innovation opportunities and efficiency gains for long-term resilience. Support regulatory alignment. BRSR by SEBI and evolving ESG compliance in India. Common challenges in implementing sustainability standards. Some of the common challenges which the companies are facing as of now. Inconsistent data across systems and formats undermines comparability. However, going forward, the uniformity will be maintained. Resource constant time, budget, and dedication ESG teams. Now, this is a separate cross-functional team, and obviously there will be increase in the budget, and plus also this require specialized skills. Lack of standardized frameworks, limited internal expertise on IFRS S1, S2, GRI, SASB, TCFD, BRSR, evolving regulations, and addressed by building cap. So all these problems will be get addressed by building capabilities, collaboration, and stakeholders, and adapting standardized frameworks. Best practices for accurate ESG reporting. Moving ahead, future outlook, evolution of sustainability reporting framework, standardized digital integration and impact measurement shaping global and India. So we look towards more standardized reports. The uniformity should be there. The digital inclusion should be there so that the compliance can be fulfilled in a easy manner. Way forward for Indian regulators and compliance. As far as ESG is concerned, as of now, the Indian regulator is SEBI. So, enhance reporting mandate align with IFRS S1 and S2. Integrate BRSR by SEBI into compulsory disclosure cycles. Promote crosswalks between GRI, SASB, TCFD. There should be integration. There should be uniformity among various boards who are working on ESG. Whether it is SEBI, whether it is GRI, whether it is SASB, whether it is TCFD, or whether it is IFRS. There should be uniformity among the requirements, which will make corporate easily fulfill the compliances. Integrating ESG into strategy and governance. So ESG will further help any of the corporate in building the strategy of the organization. It's not only the financial, it's not only the forecast, it's not only the budget which is going to mandate the strategy or the business or the sales, it is going to mandate the strategy, even the ESG. We all know the geopolitical risk as on today. All those risks needs to be forecasted in advance because those risk also needs to be involved and accommodated while we are preparing a forecast, while we are preparing the annual operating plans of any organizations. Summary and key takeaways. Why IFRS S1, S2, SEBI, BRSR and global standards matters for Indian firms. ESG adoption increase transparency, support investor decision making and align firms with global sustainability goals. IFRS S1 and S2 set global baseline for sustainability and climate related disclosures. SEBI BRSR mandate enhanced disclosure for listed Indian entities. So overall, the ESG reporting has benefited not only the investors, ESG reporting has benefited not only the organizations, ESG reporting has also benefited all the analysts in forecasting the business of any industry or any sectors. Thank you. This was a small PPT on ESG.